Hi, I'm Charlene Reinhart. Welcome to my Wealthy Women Daily YouTube channel. Before we dive into this week's groundbreaking news from Meta, make sure you subscribe below to the Wealthy Women Daily YouTube channel and hit the notifications button so that you don't miss any updates. Now, let's move on to today's big story. My phone was buzzing out of control yesterday after Meta released its earnings report and big news. So, for the first time in its history, Meta, which is the parent company of Facebook, has announced that it will be rewarding its shareholders with a dividend. What the what? This growth company that went IPO in 2012 is offering a dividend to shareholders. Now, we know that dividends are a reward that companies give to shareholders for investing in them. And companies have different things they can do with their money. They can continue to grow the company, which many growth companies like Amazon and Google, they reinvest 100% of their profits back into the company so that they can continue to grow the company. But some companies want to return a portion of their cash to shareholders in the form of dividends. And that's what we see here happening with Meta. So this marks a monumental shift in the company's strategy. And of course, it presents an exciting opportunity for investors. You see it all online. Investors are really enthusiastic about Meta's dividend. So let's explore what this means for the market, delve into Meta's earnings report, and examine the strategic changes that are positioning the company for a bright future, according to the company executives. On February 1st, 2024, Meta's board of directors declared a quarterly cash dividend of 50 cents per share, payable on March 26, 2024 to stockholders of record as of the close of business on February 22nd, 2024. So you need to get your shares this month if you don't have shares already in order to qualify for that first dividend payment. Now, Meta says that it intends to pay a cash dividend on a quarterly basis going forward, subject to market conditions and approval by the board of directors. So remember, just because a company declares a dividend once does not mean they are going to consistently declare dividends. The board of directors has to review the financials and make sure that a dividend makes sense. This move comes alongside a jaw-dropping $50 billion authorization for additional share buybacks. Now, with shares surging 15%, over $400 per share, and after hours trading following the announcement, investor enthusiasm is palpable. But what led to the decision? And more importantly, what does it signal about Meta's future? So let's take a quick look at Meta's stock price. Yesterday, on February 1st, the stock closed under $400 and it moved up 20%. So right now, as of February 2nd, stock price is $476. Meta is close to $500. Investor enthusiasm is palpable. I have to say it again. Meta's low over the last 52 weeks was $167. And now Meta is over $400. So if you bought Meta at its low within the last year, that's a $300 gain per share. And now you get the dividend. But you have to look at the financials to see if Meta's performance and its revenue and business model is sustainable. So we're seeing capital appreciation here. The stock price is going up, but you also have the dividend payments. So Meta's leap into dividend payments reflect this transformation into a leaner, more efficient company. So Mark Zuckerberg said that Meta has navigated a year of efficiency in 2023, resulting in a streamlined operation capable of executing its vision more efficiently and swiftly. Now, the dividend news was just one part of an impressive earnings call. Meta reported a record fourth quarter revenue of $40.1 billion, surpassing analyst expectations. This performance was driven by a 25% year-over-year increase in revenue for the fourth quarter. with ad revenue leading the way at $38.7 billion. So this really cements Meta's position as one of the most dominant advertising companies around the world. So let's take a look at the ad impressions and price per ad. In the fourth quarter of 2023, ad impressions delivered across their family of apps increased by 21% year over year, and the average price per ad increased by 2% year over year. On the other hand, Alphabet, which is the parent company of Google, saw its stock tumble after releasing its earning results this week. Let me pull up the fourth quarter and fiscal year 2023 results. On Tuesday, January 30th, 2024, Alphabet announced its financial results for the quarter and fiscal year ended December 31st, 2023. The CEO said, "We are pleased with the ongoing strength in search and the growing contribution from YouTube and cloud. Each of these is already benefiting from our AI investments and innovation." So just like Meta, Google is also investing in AI in order to secure its revenue. So as we enter into the Gemini era, the best is yet to come. That's what the CEO said. Now, I don't think investors were feeling that optimism that the CEO shared because the stock price dropped after the earnings call, even though revenues increased year over year. So we see the quarter ended numbers as of December 31st, 2023 and 2022, and then the year ended numbers as well for the revenue. But let's take a look at this. So we have Google search and other revenue increased $48,000. YouTube ads, it increased to $9,200 in 2023. And Google network, that was a decrease, $8,297 from $8,475 in 2022. But Google advertising overall, there was increase to $65.5 billion, quarter ended December 31st, 2023. So even though those advertising revenues were up 11% year over year, the company still fell short of the forecast, right? So even though it looks good, you see growth, it did not meet expectations, and investors don't like that at all. So while advertising revenue was Meta's claim to fame this earnings season, the ad revenue, which is the heart of Google's business, worked against Google, and the stock price slid after the earnings call on Tuesday. So we see two companies that are very dominant in the advertising space, and how their use of AI and how analyst expectations played a role into the reaction that took place after the earnings were announced. Facebook was a big shocker. Facebook came in with great earnings, and they also came in with a dividend so that they could return cash to investors. So we will see what's to come. We will see if Facebook can keep this momentum going, if investors are going to be satisfied with the performance, and if other companies like Google will try to reclaim their market share. So if you look at advertising revenues, you may want to think about the customers. Where are the customers going for their advertising needs? Maybe some of the customers that Google had went on over to Facebook because Facebook had more promising insights and opportunities for advertisers. So as you are looking at your investments or your strategy, you want to look at the business model and how hard or easy it is for a company to attract more market share. So let's talk about headcount and hiring. Beginning in 2022, Meta initiated several measures to pursue great efficiency and realign their business and strategic priorities. People were thinking, oh, the metaverse didn't work out, so the layoffs took place. 2022, a lot of their departments, a lot of their new initiatives like Facebook Bulletin shut down. And let's look at the headcount right now. So right now, as of December 31st, 2023, headcount was 67,317, which represents a decrease of 22% year over year. So Meta did some massive layoffs, but they anticipate growth in payroll expenses as they work down their current hiring underrun and add incremental talent to support priority areas in 2024, which they expect will further shift their workforce composition towards higher cost technical roles, as we see here. I strongly advise you to check out the earnings call for more information so that you can analyze the financials and see about the sustainability of Meta's revenues. What I really liked is that Susan Lee, she is a 37-year-old CFO, and she was sharing her insights on the call. She emphasized the importance of creating engaging on-platform ad experiences, which streamline the connection between advertisers and their marketing data. What I really think is cool is that a lot of people are afraid of AI, but Meta is fully trying to leverage AI to better help its customers. Remember, there's a difference between users and customers. Users are the people who are on the platform posting and sharing insights, but the customers are the advertisers. And so, how can Meta make the platform more friendly, more efficient for advertisers? So they are leveraging artificial intelligence to redefine this advertising platform. By integrating AI across the board, Meta is optimizing ad delivery to ensure relevance and efficiency. So there's a good matchmaking process. Now, this strategic use of technology not only elevates the user experience, but it also provides advertisers with unparalleled precision in targeting and engagement. All right, that's it for now. There's so much more, but I don't want to overwhelm you. Make sure you listen to the earnings call. Make sure you follow us every week because I will be talking about dividends to help you build your dividend portfolio this year. But I'm signing off. Have an amazing week.